2011. Two computer scientists, Louise von Ahn and Severin Hacker, founded Duolingo at Carnegie Mellon University. Their mission? To make education free and accessible for everyone, all through gamified learning. Duolingo's bright interface, daily streaks, and that adorable owl quickly became addictive. It wasn't just an app, it was a habit. By 2019, Duolingo had over 300 million users. Their model was simple: offer free lessons and make money through ads and premium subscriptions. And it worked. Growth exploded, engagement skyrocketed, and by 2021, Duolingo went public on the NASDAQ under the ticker symbol DUOL. Its IPO was one of the biggest in edtech history, starting around $102 a share and jumping over 35% on day one. Investors saw Duolingo as the future of education. AI, gamification, and a massive user base. What could go wrong? But like many tech darlings, Duolingo's growth story started to crack. The same gamification that hooked users started to work against long-term learning. People were collecting gems and streaks, but not fluency. Critics began to call it language learning light. Users were playing a game, not mastering a skill. Then came the years 2022 to 2024, a tough time for edtech. Post-pandemic engagement dropped, ad revenue slowed, and subscription growth began to flatten. Meanwhile, competitors like Babbel, Busuu, and new AI-powered tutoring startups started eating away at Duolingo's market share. Even their attempt to pivot into literacy and math through apps like Duolingo ABC and Duolingo Math didn't to make the same impact. Internally, Duolingo doubled down on AI, using GPT models to personalize lessons and even replace human translators. It was innovative, yes, but it also increased costs, and investors began asking a tough question. Can this company actually make money long-term? Let's look at the financials. Despite tens of millions of users, only a small percentage pay for premium. In 2025, roughly 7 to 8% of active users subscribe to Duolingo Plus. That's good, but not great. And with slowing user growth and increased AI spending, profit margins started shrinking. The stock, which once soared above $200, started to slide. Analysts downgraded their outlook, and investors began losing faith in the edtech hype cycle. But it's not all doom and gloom. Duolingo still dominates language learning apps, with over 700 million downloads and a brand so iconic it's basically a meme. Their push into AI tutors and voice recognition could give them an edge as education becomes more personalized. The real question isn't whether Duolingo can survive. It's whether it can evolve. Can it shift from a fun app to a serious learning platform? Or will it stay a gamified toy, great for engagement, but not for real results? From an investor's perspective, Duolingo is a fascinating case study. A viral brand with real impact, but with questions about its scalability. The company's biggest challenge isn't user growth. It's monetization and retention. In other words, how do you turn daily streaks into sustainable profits? If Duolingo can leverage AI responsibly, expand into new subjects, and build genuine learning outcomes, it might just pull off a comeback. But if not, the owl may keep hooting, but investors might stop listening. So what do you think? Is Duolingo still a buy, or has the owl finally flown too close to the sun? Drop your thoughts in the comments below, and don't forget to like, subscribe, and hit that bell for more deep dives into business and investing stories.